Welcome to this amazing new series on mutual fund, where I decode on every aspect of debt mutual funds, equity mutual funds, any type of mutual funds, where we are go to deep and also overview about what kind of mutual funds you can look out and buy for your investments. So till now you're not subscribed, to then subscribe this channel and get all the updates. Hi, this is Mahesh Kadran. I'm a debt freedom coach and I help working professionals to live a debt freedom free life where they can enjoy their life, whatever financial freedom they are aspiring for, and I can help them in their ways. Right. So let's dive into the presentation where I will be sharing with you what exactly is the hybrid funds is all about, because today I will be talking about hybrid fund. You know about debt funds. I will be covering a special episode on debt funds as well. I'll be covering on the special episode on the equity funds as well. But let's focus on today. What is hybrid funds? Now, there's a name suggests, it's actually the mix of debt and equity. But there is a lot of concepts which is going on in the market and a lot of misconceptions which is understood by the investors as well. And they are not able to understand what exactly is this mutual fund is all about. And this actually, I should say that there should be in your portfolio is a bouquet of your mutual funds. If you're having three to four mutual funds portfolio in your portfolio, I would strongly suggest you can have this kind of mutual fund in your portfolio as well, so that you can get a good things. So let's understand what is hybrid mutual fund. There are types of mutual fund that invest in more than one asset classes. Now you have seen that debt mutual fund always invest in debt instruments, debt related instruments, and equity investments will relate with the equity mutual funds as well. But more often there this combination, this hybrid is a combination of equity and debt assets, and sometimes they include gold and even real estate as well. But majority of hybrid funds have been investing in debt and equity assets. Now they have three fundamental philosophy. That's main. Their asset allocation is important, their correlation with that particular assets, and the diversification. That's the base of your hybrid funds, without which you can't move ahead. Okay. Now, asset mutual funds, what are the asset allocations? So it involves distributing the wealth among the various asset classes, correlation to your refer to the moment of returns among asset diversification is like that thing. Now, aggressive mutual funds invest only in between your 65 to 85% of total asset in equity and equity related instruments. Then no way they invest the remaining, they will always invest in 35 and 20% in debt securities and money markets. Now this ratio might differ depending mutual fund companies to companies, schemes to games, because there are different types of, again, there are different types of mutual funds are there in hybrid as well. So it depends upon the fund manager, how they are allocating these funds and how they are going move forward. Okay. Now, what are the advantages of debt mutual funds? Or before that, let's understand what are the advantages of investing in this particular hybrid mutual funds. The many important thing, and the first important thing, if you see, is called as automatic asset allocation. Now, this helps the first timers and investor who doesn't want any services of a mutual fund advisor or a coach, or don't want mutual fund, too much mutual fund schemes in their portfolio, like I was saying earlier. And also it works for the DIY investor, that is do it yourself investor, because they don't want to distribute, they want to handle their portfolio there on their own. For them, this is very good. But again, this is where the people go wrong, because here as and when the equity allocation goes about the 65 to 75 mark, the fund manager is forced to reduce the equity allocation and move to debt and vice versa, and thereby helping in the auto allocations. Now this happens in true market conditions, and it is very difficult for DIY investors to keep a regular track on this particular automatic asset allocations happening in the market, because fund manager doesn't tell or update to the investor saying that I am doing this, I am doing this, right? If they are doing like this, then they would have not got time to invest in the market or have time in the look at the market, right? So it's bit of like 50-50 catch 20-20 situation, I would say, because DIY investors might face some problem, and they might not face one, but depending upon the knowledge and about the experience what they have. Now, very important things from my side, five consider things to consider before investing in hybrid funds. The one thing and the important thing is returns. Whom firke, always you come to one point, that is returns. And here also, Not a great deal. Return is there, but again, it is affected by the performance of the underlying investments. Why? Because again, it is equity-related investments and debt. So equity will affect the returns of the tune to the equity exposure. So it depends like 65 to 80% or 60% to 80%. It depends upon that. But the debt also have a particular return risk as well. So there also the debt market performance also will affect the returns of your hybrid fund as well. So in case if your 65% of equity, say for example, is doing good, so you are expecting good return from your portfolio or from the mutual fund scheme. But then again, in that particular thing, when the debt market goes down and you're not getting good returns, that's where again your total returns will come to low. So this is very important that you need to balance out between this. That is why this always they say that it is useful for the first time who doesn't want to take much risk and everything, just want to experience how the market is working, how the mutual fund is working with both the respective market. Okay. Now the risk in hybrid funds primarily depending upon the performance of the proportion of the equity holdings in the portfolio. Now here a very important thing is that the higher the equity component, the risky the fund will be there. But again, there is this flip side. The flip side is that the debt market, now they can't increase up to, they can increase up to 20 to 35%, but still the risk is there with the debt market as well. So higher the debt component, yes, the risk might be there in the fund as well. Okay. So it's a both side situation, and the time horizon is very important. So it's suitable for the 3 to 5 years. I have always say that mutual funds, if you want to invest in mutual funds, go for more than 3 years. Don't stay invested for 3 years. You will never get anything because you're starting with an investment of a SIP of 1,000 rupees, 10,000 rupees, 20,000 rupees. How much do you think, with respect to the inflations and other thing or the market conditions, do you think you can get returns? Depending upon the various kind of performance snapshots they're showing across the country and across the YouTubes and everything. Do you think you can get that return? No. So you have to think twice before doing that. So longer the time horizon, the better chance of getting the stable, because stability is more important than the higher returns. Remember one thing, the more your investments be stable, the more you can expect a regular flow of income in your portfolio or in your bank account. If that is not happening, somewhere, something you need to do to make that stable. Otherwise, again, you have to go back to the traditional investments like fixed deposits or everything, because there the stable returns are there. The returns are, the chances of getting stable returns are. Okay, so these are the 5 things you need to consider before investing in hybrid fund. Now, that this is the third thing here. The fourth thing is cost. Like any other mutual funds, hybrid mutual fund also charges a fees known as the expense ratio. So every mutual fund have that expense ratio, and regarding that equity mutual funds also there. So lower the expense ratio, the better for the investment. So that's the common thing for all the investments in mutual funds. Investment strategy is very important. So you have to read the SID document, scheme information document, to read and understand what combination of assets are selected by the fund manager, what kind of strategy they are following. Now, I know that scheme information document is not getting updated as and when required, but still it will give you a rough idea how to do a fundamental analysis on a mutual fund. Because the time, say for example, you're doing a fundamental analysis on stock, what you do refer? You refer the balance sheet, right? You refer the cost and profit and loss statement, right? Same way for a mutual fund, why don't you refer the scheme information document? The scheme information document. Why don't you refer these 2 documents, which is very important? So you have to refer this portfolio so you get an idea that combination of select assets are selected. Now, investors cannot influence how the various components can be chosen or combined. So as of now, this has not been done. You can't interfere in the strategy of your fund manager. Okay. Now we come to the taxation. Taxation is very important. You talked about returns. Now you're talking about, Mahesh, what about the taxation? The biggest advantage is there. See, when the 20 or 30% which is allocated to your debt fund, tax treatment is only of equity funds. That's the bad part of this. So for key schemes which is held in less than 1 year, greater than 1 year, long-term capital gains of more than 1.25 lakhs in a tax at 12.5%. But while for the holding period less than a year, short-term capital gain of 20% is applicable. That's what I said, that go for longer term, 3 to 5 years or 5 years. That's where you get, you can gauge the return of the mutual fund. You can gauge the stability of that mutual fund scheme. whether it can give you wrong returns. Because after 5 years, no, it will give you certain patterns in your returns, in your investments. And that patterns you need to identify. And then you can decide how much increment you need to make in your SIP, or how much lump sum have to make in that particular SIP to reach that financial goal and everything. So that's very important. So the investor who is in higher tax bracket gets exposed to the fixed income and eventually pays the low tax. But that's okay. It doesn't matter much of that. But yes, if the short-term capital gains of equity-oriented habits are less than flat rate of 15%, and also some, yeah, since it is equity-oriented fund, so some companies might distribute dividend. And if you're going for dividend option rather than the growth option, so dividend might be distributed subject to the distribution tax of 10%, excluding the surcharge and cess. So everything it will come. Okay, now who should consider this very important thing? So like I said, financial finance also saying that first time investors who are moving to mutual fund for a fixed income products and in an automatic asset allocation product can consider this fund. So they don't want to much depend on this particular fund, so they can go for this. Okay, now investors should opt for the schemes with a track record of higher allocations to large cap, such as companies with well established with a low track records, long track records. Okay, and investors with a moderate risk tolerance and invest at least 5 years should consider. Otherwise, there is no what we can say, no need to invest in mutual fund. Then you have other types of mutual funds who can do this. Okay, so hope this particular short video of what is hybrid mutual funds you are able to understand and how you are getting done, right? So stay tuned, because I will be coming for some more videos related to mutual funds. This is a playlist called as mutual funds. You can just click on that and you can just browse to the video. There's 15-20 minutes video I will be shorting upon, so you can know that. And if any questions are, shoot out in the comment box and I will surely help you and do that. And right now I'm offering an one-to-one consultation for first 50 members. So if anyone is interested, now this free. I will not be pitching any sales. Okay, I will be just doing one-to-one free consultation to help you to wherever you need, and I can give some suggestions based on my experience and I can help you a lot. So based upon that, if you want really interested, check out that link which is mentioned in the YouTube description box, and just book the calendar with me. Okay, so stay tuned for the next video. See you. God bless you.